What are some of the biggest mistakes you've seen people make in trying to get this right? You know, all of this bringing all this together. Sometimes they just don't do it and they just kind of pick and choose, or what do you see happen?
Most of the mistakes I've seen in this arena are usually because someone is acting too fast and they don't have the awareness of the tax consequences. And it seems like a no-brainer to pay attention to those, but life happens, and sometimes life happens fast. Paying attention to those tax ramifications, understanding our next dollar out, how that could be taxed, that can really separate us from, again, being successful and making some of those mistakes that can add up and hurt our chances at a successful retirement.
Good. One of the things that I think people sometimes get tripped up on is, they want to keep things simple, right? They don't want to make it more complicated, and they're like, well, you know what, I'm going to take money from this account this year because it did well, or I'm not taking it from this account because it did well, and I'm going to take from this one that didn't, and they don't really look at the taxes fully. And I know you do this, Connor. We have to remind people the IRS, the Treasury Department technically, is not going to give somebody a break this year because last year they paid a lot, right? Exactly. Each year stands on its own.
And adding up and figuring out what our tax rate is in this year can be very important. And like you mentioned, it can change drastically from year to year. And that's kind of a ramification that we want to pay attention to, because it could be an opportunity, or it could be a moment where you pulse the brakes a bit and say, hey, take a pause, take a breath, and figure out maybe what the next step forward should be.